Hello everyone, and welcome to our solution to question 9 of the mock examination. Of course, the question went that Gorilla Limited purchased a machine with an expected useful life of 6 years for 9 million. After 2 years of use, management revised the expected useful life to 8 years. The machine is to be depreciated at a rate of 30% per annum on reducing balance basis. A full year's depreciation is charged in the year of purchase with none in the year of sale. During year 4, it is sold for 3 million shillings. And of course, in the mock question, we were required to compute the profit or loss on disposal. So, of course, going straight into our solution here. All right, this is our solution to question 9. And of course, here we are going to calculate the profit or loss on disposal as required in the mock question. So in this column, I'll put the year. I'll include the year right there. In this column, I'll show the depreciation charge. Of course, the depreciation charge is going to be calculated as the carrying amount times the rate we are given as 30%. And then in this column, I'll put the accumulated, okay? I'll put the accumulated depreciation right there. And then finally, I'll show the carrying amount, or what we may call the net book value. Of course, the depreciation, the accumulated depreciation, and the carrying amount are in shillings. All of them you indicate. All those are in shillings. Of course, we are told that the machine was purchased at a figure of 9 million, and it's going to be depreciated at the rate of 30%. So in year number 1 here, I'll indicate that in year number 1, I'm going to depreciate the 9 million times 30%. If you make use of your calculators, you'll be getting a depreciation charge of 2.7 million. So that's the 2.7 million I bring here. That's the depreciation charge. I've multiplied the carrying amount of 9 million in year 1 times the rate given to us of 30%, and that gives us 2.7 million. Now, since it is the first depreciation we are making, it is the same accumulated depreciation, and therefore the carrying amount here is going to be 9 million minus 2.7 million, and of course my calculators give me a figure of 6.3 million right there. So in year number 2, I move into year number 2, I bring the 6.3, the depreciation charge for year number 2 is going to be the 6.3 million, okay, this one here, times 30%. So my calculator is giving me a figure of 1.890. Since we are in the second year, we shall add these two, okay? We shall add 1.890 plus 2.7 to give us the accumulated depreciation of 4.590. Now, the carrying amount for year number 2 here that I'm going to include here is going to be 6.3 million minus the 4.59 million, the accumulated depreciation, and that gives us a figure of 4,410,000. So as we go to year number 3, our machine has a carrying amount of 4.410, okay? So the depreciation charge is going to be the 4.4, okay, 4.410 times 30%. So my calculator is returning a depreciation charge of 1,323,000 that I'm going to charge in the profit or loss for year number 3. And of course, the accumulated depreciation in year number 3, we shall add the depreciation charge for that year and the accumulated depreciation coming from year number 2, and that gives us a figure of 5,913,000. Now, at the end of the day, at the end of year number 3, the carrying amount is going to be 0.410, the previous year's carrying amount, minus the depreciation charge of 1.32 for this year. And of course, my calculator is giving me a figure of 3,087,000. Now, we are told, when you read the question, we are told that in year number 4, the asset or the machine was sold for 3 million. And according to the depreciation policy of the company, we are told that a full year's depreciation is charged in the year of purchase with none in the year of sale. So in year number 4, we shall cease to depreciate, and therefore we are not going to have any depreciation charge taken to our statement of profit or loss for the year number 4. So in year number 4, definitely I'm going to indicate that the depreciation charge in association with that particular asset machine is going to be 0, because this is the year of disposal, and we are told that in the year of disposal of this asset there is no depreciation. All right. Now we proceed to answer our question. We are required to compute the profit or loss on disposal. Now, of course, from our previous discussion, from the lecture we had on non-current assets, we mentioned that profit or loss on disposal is going to be the proceeds, okay, the proceeds from disposal minus the net book value, or what we may call the carrying amount in the final year. So we have seen that the carrying amount of the final year is 3,087,000, whereas the proceeds, we are told, when you look at our question here, we are told that the proceeds are a figure of 3 million. We received 3 million on the bank account as proceeds from the disposal. So I'm going to apply my formula. So I begin by recognizing the proceeds as per our formula, which is 3 million minus, okay, this one we are deducting, so we say less the net book value of 3,087,000, which I'm picking from our depreciation schedule right there. So when you look at the difference between the two, there is definitely a loss on disposal, because the net book value is bigger than the sale proceeds that we received. So we end up with the loss of 87,000 for that matter. So that is why the correct answer in the mock examination has been indicated as 87,000.